In this track and trade trading training video, I want to talk to you about the settings of the seasonals indicator. Now, the seasonal indicator comes in three parts. The first part, of course, being the historical averages that lay right directly over the top of the chart. Now, these are price averages. The second part being the seasonals. This is what we consider when we say the seasonal average, but this is the seasonal averages that lay down in the underlay indicator, just a standard window. And notice that this one is based on a 0 to 100 scale, whereas the one above, this is actually a price average. So there's a difference in looking at these and how they work. And then, of course, the third part is the probabilities. Now, this goes right down to the daily time frame and tells you the probability of a market closing higher than it opened than the previous day or closing lower than the previous day. Now, we're going to go back to the seasonals indicator. This is what I call the seasonals indicator. So when you hear me refer to the seasonals indicator, I'm generally referring to this indicator down in the bottom window. If I say the seasonals historical averages, that's what I'm referring to up in the upper window. Now, the settings are what I want to talk about in this video. So down here, when we click on the seasonals indicator, the settings will come up as long as we have that third tab set. Now, over here, you'll notice that we have the different trends. Now, we can come in here, and trend 1 is set to 10 years. So you'll see down here in the right-hand corner, this is 10 years. And then we've got it set as blue. And notice that the line, of course, there's a line there, and the line is also blue. So that's why you see an outline of it like this. So now we're going to come in here, and we've got the second indicator, the second series, which is red. And so the red one is set at 15 years. So these are the two averages. Now, the difference between the blue, which is all filled in, and the red, which is not, is simply this little button right here. If we unclick it, you'll notice you just have two lines. So the blue is really there. It's more for looks than anything else. It's the one that I think is the one that is the most important. So that's the one I like to have filled. I like to fill it with blue, the 10-year for me. Now, for you, you might like to look at a different average, and you can make those colors be whatever you want. Now, the scaling is set up so that we have the last 12 months or the entire contract. Now, it depends on the contract, because if you go into the entire contract, it changes the scaling just a little bit depending on how long or how old the contract is. So in a contract like maybe crude oil or the Eurodollar, which are very long contracts, if you scale it so on the screen the computer draws it in proportion to the entire contract, it kind of flattens it out on those really long contracts. You'll notice on these shorter contracts, such as the 10-year T-note, it really doesn't make much difference. In fact, it's hardly any noticeable difference at all. So, but I like to have it scaled to the last 12 months, because that, to me, is the most important time frame of any contract. It's the time frame in which we, for the most of us, that's when we're trading this contract, is just through the last 12 months. And so we scale it to that year is really what we're doing. We're scaling it to the year, the final year before expiration. Now, the thresholds are just markers, and we can come in here and say, well, this one's going to break. If it breaks above the 80%, we're up into the 80 percentile average, and that's what these are. So they're just markers on the screen, and if it drops down below the 20 percentile, this would be an area where we might be looking for a buy opportunity or an opportunity for the market to reverse and go once again. When it's inside of those regions, this is considered that the market is, not in an extreme either one way or the other. So this is an example of the settings for just the lower indicator.
The content of this program does not constitute investment advice. This program is to help enlighten you to the opportunities for further education and training techniques by industry leaders. This should not be considered as a solicitation to buy, sell, or invest in securities, options, futures, or Forex. Remember, trading does involve the risk of loss. Past performance is not indicative of future results. Stocks, futures, options, and Forex trading is not suitable for every investor. Please consult a professional regarding your financial situation before placing a trade.